Why is Warren Buffett, the world's greatest investor, sitting on a massive $325 billion cash pile? Does he know something we don't? Is he preparing for a market crash? Or is this just a reflection of his patient, long-term investment strategy? Welcome to Wealth Step. In this video, we'll dive deep into Buffett's legendary approach to cash reserves, explore the historical context of his decisions, and reveal the valuable lessons every investor can learn from his actions. Stick with us to understand how Buffett's strategy could shape your own investing journey. 1. The mystery of the $325 billion cash pile. Warren Buffett, often called the Oracle of Omaha, has consistently outperformed the S&P 500 by over 1,200% over the past 3 decades. His company, Berkshire Hathaway, is known for thriving through market fluctuations. However, Buffett is currently holding a staggering $325 billion in cash, which represents about 30% of Berkshire's portfolio. To put that into perspective, $325 billion is larger than the annual GDP of many countries, including Finland, Portugal, and New Zealand. Typically, Berkshire Hathaway is a company that actively allocates capital through acquisitions, stock investments, and building operational businesses. So why is Buffett sitting on so much cash? Historically, Buffett's cash reserves have been used to wait for the right deal or once-in-a-lifetime buying opportunities. In 2008, during the financial crisis, Buffett used his cash to invest in companies like Goldman Sachs and General Electric at rock-bottom prices. He also avoided speculative markets like the dot-com bubble in 2000, instead investing in undervalued sectors. However, today's cash pile is larger than ever before, and it hasn't yet been followed by strategic investments, raising questions. Is Buffett preparing for a market crash, or is he just being patient in a high-valuation environment? The massive scale of Berkshire Hathaway today complicates Buffett's ability to make meaningful investments. With a market cap of over $1 trillion, finding investments large enough to impact the portfolio is harder than ever. Buffett also insists on buying great businesses at fair prices, but finding such businesses in today's high-valuation environment is challenging. Ultimately, Buffett's $325 billion is a reflection of broader market dynamics and his patient, calculated approach to investing. 2. Historical context. Does Buffett always do this? Buffett's current cash reserves aren't entirely unprecedented. To understand why Buffett is sitting on so much cash, it's helpful to look back at previous instances. The cash buildup of 2004-2007, a prelude to the financial crisis. Between 2004 and 2007, Buffett maintained unusually high cash reserves, often exceeding 20% of Berkshire Hathaway's portfolio. This was during a period of high optimism and a booming housing market, but Buffett remained cautious. Rather than chasing overvalued stocks, he let cash accumulate, preparing for better opportunities. Critics questioned his strategy, but in hindsight, his caution was well placed. When the financial crisis hit in 2008, Buffett was able to capitalize on lower asset prices by investing in Goldman Sachs, Bank of America, and General Electric, making massive profits from these investments. The dot-com bubble, a lesson in restraint. During the late 1990s, Buffett avoided the dot-com frenzy, focusing on tangible businesses like Coca-Cola and Gillette. While the tech sector was exploding, Buffett's strategy of staying cash-heavy paid off when the bubble burst in 2000, leaving him with relatively unscathed assets and positioning Berkshire Hathaway as a stable company. Today, Buffett's $325 billion cash pile is much larger than during these historical periods. But does it mean history is repeating itself? Are we about to see another market correction? 3. The economics of caution. Buffett has always been clear about one thing. He doesn't time markets. Instead, he focuses on intrinsic value, buying when stocks are undervalued and holding cash when stocks are expensive. The challenge today lies in the high valuations of stocks across nearly all sectors. Valuations are sky high. The current market's price-to-earnings (PE) ratio is reminiscent of the dot-com bubble in 1999, suggesting that stock prices are unsustainably high. Buffett's discipline and patience are guiding him to wait for a better buying opportunity. Expensive across the board. Nearly every sector is trading at historically high valuations. making it difficult for Buffett to find attractive opportunities. Cash, which once offered little return, now yields a more appealing return due to higher interest rates. In this high valuation environment, Buffett's strategy of patience seems more prudent than ever. 4. Real-world scenario, Buffett's strategy in action. Imagine you're an investor during the late 1990s when the stock market is booming. Everyone is jumping on the tech stock bandwagon, but Buffett is quietly building cash reserves. When the dot-com bubble burst in 2000, Buffett was ready to deploy his cash to acquire undervalued companies. The parallels today are striking. High valuations? Check. An overheated market? Check. Buffett stockpiling cash? Check. Could we be on the brink of another market correction? 5. Debunking the market timing myth. It's tempting to think that Buffett is preparing for a crash, but his strategy isn't about predicting market trends. Instead, it's based on the core principles of value investing. According to Benjamin Graham's The Intelligent Investor, the idea is simple. Buy when stocks are cheap and hold cash when they're expensive. Right now, stocks are expensive, so Buffett is waiting for the right opportunities, patiently. 6. Lessons for everyday investors. So, what can we learn from Buffett's strategy? Patience pays off. Buffett isn't rushing into the market just because others are. He waits for the right opportunities, even if it means sitting on cash for years. Follow the fundamentals. Buffett's strategy revolves around value investing, focusing on intrinsic value rather than speculating on short-term trends. Prepare for the long game. Holding cash isn't a sign of fear. It's about being prepared. When the market corrects, Buffett will have the resources to capitalize on opportunities. 7. Are we headed for a black swan event? While Buffett's cash pile might seem like a warning signal, predicting economic downturns is notoriously difficult. Even Buffett himself has admitted, "I can't recall ever making an acquisition or turning one down based on macroeconomic factors." However, certain indicators suggest caution. Negative yield spreads. The earnings yield of the S&P 500 is currently lower than the yield on cash, a pattern that often precedes market corrections. Economic uncertainty. Inflationary pressures and geopolitical tensions create risks on the horizon. Could these factors culminate in a black swan event? It's possible, but even if they don't, Buffett's strategy remains a solid one. 8. What happens next? What's the next move for Buffett and his $325 billion? When valuations drop, he will likely swoop in to acquire undervalued companies, just as he did in 2008. In the meantime, Berkshire Hathaway's cash reserves serve as a safety net, ensuring that the company is prepared for any eventuality. As for the rest of us, the key is to stay disciplined. Whether the market booms or busts, sticking to sound investment principles will always pay off in the long run. So what do you think? Does Warren Buffett's $325 billion cash pile indicate an impending market correction? Or is it simply a sign of his unwavering patience and long-term vision? We'd love to hear your thoughts. Drop your comments below and let us know what you believe Buffett is planning next. If you're ready to dive even deeper into the world of investing, make sure to hit that subscribe button and turn on the notifications so you don't miss out on more insights like this. And if you found this video valuable, don't forget to give it a thumbs up and share it with fellow investors. Let's continue to grow our wealth together, one strategy at a time. See you in the next video.